Hello, Happy New Year, and welcome to the January market update. I'm Tony Marlette Jr. at Brookside Tax and Financial Group. Let's take a look at what we saw in December and overall in the year 2023. Markets were up in December, which was consistent throughout 2023. For the year, the NASDAQ composite was up 44%. The S&P 500 index was up 26%. And the Dow Jones and the Russell 2000 were each up between 16 and 17% for the year. Even the aggregate bond index, with interest rates rising, was up 5.5%. This was all a marked improvement over 2022. Of course, the big financial stories were interest rate raises, inflation, and the Magnificent Seven stocks propping up disproportionately the S&P 500 index, which is the standard bearer for the markets. If we take a look at what we can see in 2024, there are still some leading economic indicators that suggest earnings could slow down, including the inverted yield curve, which was present pretty much all of 2023. Especially of importance could be job cuts. Remember, if earnings propped up the market and we see job cuts, people are going to stop spending money, thus earnings are going to fall, and we could see the market drop. If people are keeping their jobs or they have confidence that they could land a better one, they're going to continue to spend money. Inflation is starting to come down and come into line with more historical averages. And we do not expect any more rate raises at the moment. And we can expect some cuts, maybe cautious cuts, into the second quarter of 2024. The S&P 500 does seem a little elevated now. And if there are projections for positive earnings, they should be relatively tame. And while stocks are not cheap, there is some room for some small growth. Of course, we do have catalysts for some short-term fluctuation as well, being geopolitical risks and a U.S. presidential election. Remember, we said short-term. Those things are always going to come with short-term volatilities. Markets are often very difficult to predict, which is why we always recommend diversification. It allows you to stay invested and remain flexible. The big performers in 2022 did not perform well in 2023 and vice versa. It's important to always stick to your goals, strategy, and time frame. And if you diversify, there's really no prediction that's needed, but it allows you to plan for those unforeseen events that we so often see in the markets. If you'd like to review your portfolio with us, we encourage you to do so. You can visit us online on our YouTube channel or on our Facebook page as well. From all of us at Brookside, we continue to look forward to working with you, and we wish you a prosperous new year.